Welcome to the August 25th, 2025 Advance Report from McGowanGroup clients and networthradio.com listeners. What a Friday! This was amazing. So Jackson Hole Economic Symposium, Fed Chair Powell, of course, is the keynote speaker. And he finally said they need to adjust their policy. This has been since 2022, that massive tightening cycle that set off a bear market. NASDAQ was down 34%. Now he's starting to bring those rates back down. He's already cut 1% before the election, and he's been stubborn. Institutionally, it's pretty clear that the overly restricted Fed funds rate looks like 6 cuts ahead if inflation stays low. And the Dow Jones Industrial Average took off, spiked nearly 1,000 points on Friday, reversing a sell-off in tech. And I'll show you that because it was a warning sign. What happens over the next couple of years as those rates come down? The net present value of future cash flows by definition becomes much higher. So you could have high cash flow assets with significant appreciation. I think that extends across the dividend companies, and some of the bond funds actually look really attractive if you price them relative to a 3% cash rate, which Powell finally indicated he is going to start to cut the rates. Now, this was actually the NASDAQ. What was happening right here? It did reverse on Friday. The Dow made a new all-time high above 45,700, but we had a tech correction in process, or a tech sell-off. And the big concern is huge capital expenditures. NASDAQ index up 12% so far this year. The Dow up 8%. That is a strong year for equity so far. But this is Palantir, arguably one of the highest multiples. The AI software company absolutely got clocked during the week. 190 down to 140, back up to 158 on the close. What is this telling us? There are concerns institutionally that a lot of the tech is not just overpriced, but there's huge capital expenditures. You got to watch out for this, because when you start to look at the growth rates, like you can say Amazon doubled their capital expenditures. That's eating up a lot of the cash flow from earnings. Microsoft, they went from $6 billion in 2022, $17 billion in the current AI data center build out, lots of capital expenditures. Now, that can weigh on earnings in the future. Right now, Microsoft is about 2/3 of its earnings equivalent that they're spending on the big AI build out. Now, it's going to be very interesting to see what investors will pay. But I think there's a better place to look. When we look at free cash flow in the dividend companies, the value sector was called out by Jeremy Grantham this week. GMO manages over $100 billion. He did his 7-year forecast. He says U.S. large cap growth likely to have a negative return for 7 years. But he went to deep value and said, wow, the dividend companies, the value companies that are underpriced, actually have a bright future. He said as much as 7% average return above inflation over the next 7 years. Bond market looks healthy and steady, and Jerome Powell underscoring the value of rising dividends. I'm Spencer McGowan, your financial weatherman, president, McGowanGroup Wealth Management, the team that cares. You can contact us at networthradio.com. We look forward to updating your plan for 2026. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.